Slide 1 title. Hello, investors. Next week marks the beginning of earnings super week, a pivotal moment for the U.S. stock market. Microsoft, Google, Meta, Amazon. When these tech giants release their earnings, do you know what the single most important number is? It's not revenue and it's not net income. The answer is CapEx, or capital expenditure. Is the AI bubble about to burst, or are we just getting started? In this video, we will decode the earnings reports and show you how to read between the lines. Slide 2. The $200 billion question. Why does CapEx matter so much right now? The combined annual CapEx of these four companies is approaching $200 billion. The market has one major concern. Where is the ROI on this massive spending? If they signal a slowdown in spending, semiconductor stocks, like Nvidia, could crash. Conversely, if they announce accelerated spending, it's a powerful signal that the AI boom is far from over. Will they keep their foot on the gas or hit the brakes? That is the question. Slide 3, Microsoft. First, Microsoft. They are running hand in hand with OpenAI. The focus is on the pace of data center construction. Their bottleneck isn't demand, it's supply. Power shortages and chip shortages. Watch for any hints on the deployment of their custom Maya chips. If Maya is rolling out effectively, it signals a path to cost reduction and improved margins. Slide 4, Google. Next is Google Alphabet. They are fighting to defend their search throne. Google's strength lies in its long history with its own TPU chips. Because they rely less on Nvidia than others, their investment efficiency might be higher. Look for concrete numbers on how models like Gemini 1.5 are contributing to search ad revenue. Slide 5, Meta. Then there's Meta. CEO Mark Zuckerberg has declared he will amass 350,000 H100 GPUs in his quest for AGI. Meta's risk is that shareholders are extremely critical of this spending. If ad revenue is growing, it's forgiven. But if ads slow down, this spending will be attacked as AI waste. Meta's earnings will test the patience of investors. Slide 6, Amazon. Finally, Amazon AWS. They are pivoting from a logistics giant to an AI giant. Watch the growth rate of their cloud division AWS. An acceleration here proves that enterprise AI adoption is real. Also, if adoption of their custom Trainium chips is rising, it means non-NVIDIA options are taking root in the market. Slide 7, the depreciation trap. Here is a pro tip for reading the financials. Watch out for depreciation adjustments. By extending the useful life of servers from 3 years to 5 years, companies can artificially boost their paper profits. If earnings beat expectations, check if it was due to this accounting trick. The footnotes often tell the real story. Slide 8, supply chain implications. In conclusion, if they say, we will keep spending, who wins? Directly, NVIDIA and networking companies like Arista Networks. But don't forget the power infrastructure. Companies supporting this energy demand, and cooling specialists like Vertiv. Big tech's cash inevitably flows to these suppliers. Slide 9, bubble or boom? Some say, this is the dot-com bubble all over again. But the difference is today's tech giants have massive cash piles and are already highly profitable. However, we are in an infrastructure phase, where spending comes before revenue. Expect volatility. Slide 10, summary. This earnings week, ignore the EPS beat miss. Focus entirely on the forward guidance regarding CapEx for the rest of 2026. If the guidance is bullish, the opportunity to invest in the picks and shovels, semiconductor equipment, and material makers is still very much alive. Prepare yourself now before the numbers drop.